to other Fibonacci work. This is just a very basic concept that you can add to whatever you're doing. Like I said, if you don't like the Fibonacci retracements even, add this to what you're doing, because it only takes 2 seconds, and you'll see how important these particular levels are. The other thing I just wanted to point out, because I spoke to someone who said that one of their trading problems is letting losses run. Okay, letting has a very high win rate, but lets the losing trades just run, I guess, hope mode. And let me just point out one of the uses of Symmetry is, let's say you had a reason. Let's just assume you had a reason to get short in here. Okay, as a matter of fact, yeah, there might, well, shorter time frame there might have been for me. You had a reason to get short here. Well, if these levels are defining the rhythm of the downtrend, well, then what would be wrong with the stop right over here above that level on your short? Okay, because if that level is violated, the rhythm of the downtrend, the very reason you're in that trade, the chart itself has told you that's not happening anymore. Okay, so that's another very, very useful way. Same idea, let's say you're in a longer term long. Okay, longer term, let's assume that this trend started down here, because if you were long from here, I think you would have bailed by the time it came back and retraced that much on a 15-minute chart. But let's assume this was a strong trend and you are a trader who's looking to hold a swing position, even a 2-day position or something like that. You're watching the chart. All you have to do once we start declining from this high, put your stop under the Symmetry, because then the chart itself is going to tell you the rhythm of the uptrend is violated. That's something, Robert Miner, some of you might be familiar with that name, he has a quote. He doesn't use this method, but he has a quote that I really, really like about stop placement. Where do you put the stop on the chart? You put a stop at the price where, if it's reached, it invalidates the reason for you to be in the trade. Okay?
Could you repeat that?
Yeah. Ideal stop placement is when you put your stop at a price where, if reached, it invalidates the reason for you to be in the trade. Now that can be for an initial stop. That's why what do we try to do in the chat room? If there's enough room there, what do we try to do? We put our initial stop on the other side of the Symmetry, if there's enough room. I had a trade like that was really startling to me a couple of weeks ago, I think, because it just sat there. It was a trade on the ES, the mini S&P. And the thing is, I was long, and people are in and out of the chat room a lot, so they didn't know what time. People kept asking me, what time did you get long, whatever, and I was like, this is boring already. I was sitting there taking a set off a 3-minute chart. It was like 2 hours. I was sitting there looking at the trade. Why didn't I bail? Because I had my stop right below the Symmetry. So there was no reason to bail. Nothing actually said. Okay, do you remember that one? I think, yeah. That was an example of using that. And it was startling to me because it was like 3 hours before the trade worked out. But the chart itself said, you know what, the rhythm hasn't been violated. And that actually wasn't that bizarre because that's set up during lunchtime. And any of you who trade, the stock index futures, if you trade those, there's a dead period in there. Usually I wouldn't even be looking for a trade during that time, but this just happened to be a really good setup. So that's how you use this for stop placement too, if you can afford to. I mean, that's another thing too, is if the Symmetry is so far away, and you end up, you have to put a stop somewhere in there, and you look at it and it's like, well, that's $300 away or whatever. You might have to step down to a tighter time frame, find Symmetry on a shorter scale, which we do sometimes too in our trading in the chat room. I'll say, okay, you know what, I can't find any Symmetry on this 3-minute chart. Let's go down to a really tight, really fast chart to at least find something we can work with for the stop. Anyway, all that aside, my point is that's something else you can do with this, is it can really, really assist you with the stop placement. Okay, here's the big one. This page should answer just about all the questions we had before about Symmetry. Why this level, why not that level, where to draw from. And this took me to write this up, let alone the years I've been spent doing this, just to write these are 3 rules. These are just 3 rules. One is for support and one is for resistance in each set. This took me about a month. just to quantify everything that I was looking at into 3 rules. Okay, so this is really the core of this particular part of my methodology. Okay, rules for symmetry. For support, now this all fits on one page, so it's very information dense, each sentence. You probably will have to reread them and practice on the chart a lot to get the idea of what I'm talking about here, but they are rules. For support, take the high to the low of corrective declines and project from the highest high after that corrective decline. What the heck does that mean? Okay, let's take a chart. Here's some Forex. How about, I don't know, anyone want to mention a time frame? Time frame? Sorry? 30. How about, I have here already open 15 and 60. Is that okay? 15? 60? Okay, how about 15? Well, okay, 30, 15, eeny, meeny, miny, mo. Let's go with 15 because it averages that out somehow. I just made that up.
Take the Fibonacci ratio.
Yeah, no, I was going for the, I happen to have open right now 15 and 3 and 60 and daily and so on. I just wanted it to be an interesting time frame for you guys. So here we have a British pound. Okay, let's see if this is a good example. Well, you know what, 15, I have to go back a little bit too far. So let's go for 60. Oh, there we have some symmetry on that chart. That's holding. Yeah, but I'm gonna erase everything on here. I just want to illustrate that rule. We take the high to the low of corrective declines. Like I said, what makes it corrective is that we have a continuing pattern of new highs afterwards. So, high to low, projected from the highest high afterwards. Okay? That's all that means. This guy was broken. Okay, but that's what you would be doing. You'd be projecting high to low from the highest high afterwards.
Mark,
okay.
How many buyers make a corrective decline in your...
I like 3 at least, a minimum of 3. Yeah, in a swing.
Is that the expansion tool?
Yes, that's expansion tool. That is all we've been talking about so far. Yeah, that's the
double click, go up and go down.
Not double click. All you do is what you do. The way to use this tool in Fibonacci Trader, I'm going to click above a high, drag to the low. You're not releasing the mouse. Drag to the low and then release. The cursor changes to that word click, and then you click above the high. That red coloring on the bar is simply the magnet telling you which bar is being selected. Okay, so that is how you do the symmetry. Now, what does that rule imply? That rule implies high to low from the highest high afterward. That means you're not going to go high to low from some high over here. You would have when this was the highest high. Okay? But now that we have a higher high, you're not projecting from this point anymore. And like I said, one advantage in Fibonacci Trader, or I call it FT, and I think that annoys Carlos to no end. But one advantage to Fibonacci Trader is that anything you had projected from this high earlier would now be projected from this high automatically. You'll see that in action on Monday. In other words, that will automatically drag up as long as you have Keep Live turned on.
So by doing your symmetry like this, you're coming up with a new support number.
Right.
And the other way you'd be coming up with a new resistance to go short.
Exactly.
If it hits that resistance, you want to go short because you're saying...
If it holds. Yeah, if it holds and you get a trigger.
And then this way, if it hits your resistance numbers and hold, then you want to go long again.
Support numbers. Yeah. Yeah.
Sorry.
Yeah. That's a funny story. I did a workshop once in Denver, and this woman insisted on calling everything resistance.
No.
It was but it was funny. Why? Because she was beginning to drive me nuts. She was also sitting right in front of me, and she'd say, "So it's resistance on top and resistance on." I was like, "No, that's called support, and that's resistance." She goes, "Well, I call them both resistance because the market is resisting going through it." Okay. Okay, well, you can do that at home on your own. But anyway, so what else, what else this implies? The highest high afterwards, so you're not going to take this projection and just do it from the last bar. That's meaningless.
Right.
You want to measure the percentage pullback, 100% pullback from the extreme of the trend. So that's what that first rule means. Okay? Is that clear
Yes.
on that? Okay.
100% pullback from the first.
I'm sorry?
100% pullback from what?
From the extreme of the trend, from the highest high.
Of course, that keeps changing all the time.
Right. Right. Yeah, but at the moment, okay, what would happen? Let's say we did this. Let's say we had, I don't know. Here's actually the swing into. See, I drew that wrong just now, so I have to erase it. Let's say we had Leonard. Symmetry support here, okay?
Right.
When that new high comes in, let's say that goes up,
Up to there.
that's going to pop up automatically and project from the new high. That way, the only thing you need to add would be this next high to low from the new high. Okay? And again, that's why it's good to work with live charts. I always insist when we do one of these workshops, and it's been a couple of...
Is there something wrong with your thing
There's something wrong with my thing?
No, with my with the mouse here, when you click on the top and you come down, and then it makes little squares and it makes a line going up again. You're not going up. There's two little different lines.
I don't know whether to say yes or no because I'm not sure what you asked. Yeah, if you can rephrase that. You're asking about something that's happening on your chart now. We'll take a look at that in the next break. Okay. Yeah, that's what I'm trying to say here, though. Basically, is that it does no good to project it from the wrong point. So that's the idea of how you're doing the support. That's rule 1. And again, it's simply high to low, projected from the highest high. That way, if you just think about it that way, the highest high, you don't have to worry, is it the right high? You just look for the highest high on the chart, to the right of your decline. Same thing for resistance. Should I go over that with resistance, or everyone gets the... Okay. A higher high must be present to find support. You can only project symmetry support from a higher high than the high of the swing used for measurement. In other words, you're not projecting from a lower high. That's what that means. You're not projecting from a lower high. You need a higher high to find support. So you would not do this. This is just my daily S&P again, so we don't have to go into who wants to see which chart. You would not do this. High to low from this high. Okay? That's meaningless. High to low from this high. And as far as finding symmetry, again, some people might use that as a target. But as far as finding symmetry, that's a meaningless level. That's all that says is you need to have the high that you're using exceeded to project from. All right, and that goes back to, if I may go back a slide here, several people asked me this question. In this example, why did I project these swings for resistance instead of taking this low to high and projecting from here? Because that low has not been exceeded. You need to have the low exceeded in order to project resistance. So when this price gets down here, then we'll be going for larger symmetry, low to high, projected from the new low. Just like here, and I think you had asked me that before. This guy, low to high from the low, this would have been projected as soon as this low was violated. Okay, so as soon as we hit this bar, we'd start to project this level, and not beforehand. You're not going to take low to high and project it from this low. Doesn't mean anything. Okay, is that clear?
Is 15 minutes the best way to do that?
No. It depends on what you're trading. It depends on, first of all, I never work with just one time frame. Okay, I am always comparing. That to me is essential. Multiple time frame. That's why Fibonacci Trader appealed to me in the first place. I haven't even gone into any of the tools I use multiple time frame yet, but I do, for example, intraday.
How many charts do you display simultaneously? in time frame, the same pair, but in different time frames?
Okay, well, I start with a daily. Okay. We also review the weekly, because sometimes something's coming up on the daily and something's coming up on the weekly, and you don't have it on the daily. And then I go to 60-minute and 15, and if someone's looking for a real tight entry, it's a 3-minute chart. Okay? Right. Well, when I started trading Forex, I was primarily trading, I would look at the daily and the weekly, but I was getting my feet wet. And I was primarily trading off the 3 and 15-minute. 3-minute for execution, 15-minute for trend. Basically, whatever method you're using, if you want to take my PowerPoint and throw it in the lake, you need to look at multiple time frames. Okay? Because one time frame is going to give you a very, very limited snapshot of the market. If you had a 3-minute pattern to upside, and you're like, this is a great trend going up, and then you bought, and all of a sudden the market stalled, maybe if you went up to the 15-minute, you go, 15 minutes actually doing this. And all I did was just buy into a corrective bounce. If I really cared about taking it easy and slow, I'd be sitting back and waiting for that correction to finish, and the 3 and the 15 to be in alignment. That's a big thing. That's why everything we have also in the chat room, multiple time frames. You know, even the ES, we look at 3-minute, 15, and 45. You know, the Forex stuff, I don't have the 3-minute stuff.
What's the ES?
ES is the mini S&P.
Okay.
Yeah. I trade that a lot these days. That's the one thing I'm doing very short term. So I have more examples in my memory, to pull from on it. Did you have a question?
May I have a question on this chart?
Sure.
Because I didn't quite get it. Let's start from the first pullback at the bottom.
Here?
I see the high and see the low.
Yeah.
Okay. Now the reason you have only one, why could you not have from the high to the other low?
What other low?
Further right.
Here?
Yeah.
Because of the rules of symmetry.
Right. What's that rule now?
The rule is that it goes to the lowest low afterwards. So this low is higher than this low.
So you go to the lowest low.
Yes, high to the lowest low after, projected from the highest high after.
Okay, got that.
Okay?
Next question.
Yes.
And this chart is that it's showing symmetry on both sides.
Right.
So here we're actually watching an uptrend, but the market is making a very deep pullback.
Right.
And so what you have done is also look at where it might make a low. So now we are now doing the reverse, so we're now projecting from the low to the high.
Yes.
But you choose 2. Now, which was the first one you used and why you choose the second one?
I chose the second one because we have also a low was put in because it started to rally after it.
Right.
And then we have a high that becomes defined as a high once we take out or violate, exceed the low there.
Violation.
There's also, right, that's called violating.
When the first one, which is the closest one to the low move, is violated, then you go backwards in time,
Yeah.
the lowest low that's lower than it.
Exactly. Okay. And there's also another one here. There's also a little baby one, low to high from low. But this is an example where I didn't want things to get cluttered.
Okay.
So you're better off doing too many of those, by the way, than not doing enough. The most common mistake I've seen people make with the symmetry is they don't look far enough back on their chart. They look at their chart the way it's scaled at that moment, and they miss a whole bunch of really nicely defined, wonderful swings earlier on in the trend because they just didn't rescale their chart. So if in doubt, do more than less instead of less. So that, that's the deal with that. And of course, the purpose here again, this could be for stop placement. This in general, what this is telling you is these guys break, the long side is winning. This guy breaks, the short side is winning. That's what that means. Okay. And I think, was there a question back there, or a stretch? Oh, a stretch. Okay. Last rule. Yeah, this actually goes back to what you were just asking me. In an uptrend, make sure to verify that you are measuring a corrective decline. The low after the high will be the lowest low after that high. So the flip side of that is exactly what you just pointed out. In a downtrend, make sure to verify that you are measuring a corrective rally. The high after the low will be the highest high after that low. Again, back to that example. You see? The high is the highest high after that low. Just like here, the low is the lowest low after that high. Okay? So I said that those 3 rules It seems very basic and all that, but there's a lot of nuance in there. I think, unless I'm just really simple, and that was the best way I could do to describe it. But if you study those, you really won't be making a mistake with these. And I think I added some no-nos here. Yeah. Okay. So what's the problem? Anyone who understands this stuff? Not someone from my chat room, guys. What's the problem with this being symmetry? Is there a rule violation there?
The last high is lower than a previous.
Right. If this for symmetry, you need to take the high symmetry support, high to low, from the highest high after, not just some arbitrary. Let me see. No, it's the highest high after. So this would have been high to low from here, then it would have bumped up to here, and then broke here, of course. Just projecting it because you opened your chart and that's the current swing is meaningless. The only symmetry support you could get in here would be here, high to low from high. Okay? This guy. Okay, everyone get that? Okay. What's wrong with this one? For symmetry resistance. What's the rule? Low to high projected from a lower low.
There isn't.
Low to high projected in order to verify. That's rule 3. Low to high must be projected from a lower low.
Right.
Okay? So I say, really, all the answers are on that slide. Oh, gee, that's an advantage to leaving the PowerPoint like this. I can point at earlier slides. Yeah. See, in other words, low to high must be projected from a lower low, because you're assuming what symmetry is going to do for you is verify that it's in a downtrend. So if it actually is in a downtrend, it's making a pattern of lower lows.
So where would you have joined it? From over towards the left or into the...
For resistance,
Yeah.
there's nothing, very little I could do here for resistance. No.
So you couldn't...
No, not for resistance. The only resistance I could have there would be the stuff we're getting into next, the extensions. Or eventually we'll get there. Yeah, this would be all about support here. You'd actually be going, assuming this high is higher than here, you'd be going high to low from high. And I'll bet that was kind of like right around here. So we're at
Go from high to low instead of...
Exactly. Okay, what's next? Oh, yeah, one last no-no. What's wrong with this one?
Trend has changed. It's just
Okay.
just hanging out.
That's not what I'm looking for, but you're right.
There's a
How do you
higher
Projection to the wrong place.
Yeah, but why is it wrong?
It's a higher high, lower low.
Didn't do the right low, and that, by the way, is what tells you the trend has changed. Who said trend has changed? You're right. So how do you know the trend has changed? Because you're starting to take out swing highs here. But what's wrong here is that this isn't the lowest low after. Okay? Symmetry support, high to the lowest low after projected from the high. So the symmetry support, where's the low here? Here, I think. High to low from new high. Okay? High to low from new high. Not high to low, and then that low is broken. All this was telling you, when this high, okay, assume that this chart ends here. Okay? At that point in time, you would have high to low from this high. When it broke, it told you the trend has not changed yet. You don't have an uptrend yet. What you're looking for is for the uptrend to start to build. So you want to take highs to lows when the lows are increasing. Okay? So you see what I'm saying? Let's say that back then, you were trying to measure to test, is it forming an uptrend? Definitely, I would have had this level on the chart when that was the high and that was the low. And we'd be sitting there going, is this going to form an uptrend? No, because the level broke. So now that it broke, we don't want it anymore. It's no longer a valid swing to use.
I understand taking the lowest low, but can you play with the highs?
Can I do what with the highs?
Can you manipulate the highs? Like, I'm not sure why you take that intermediate high.
This one?
Right. Why not take the highs before? I know the lows.
Well, you can, but like I said before, you don't want to do too many of those swings into the low because they won't be that meaningful. That's just experience with it. In other words, you would take the last, this is a clearly defined swing. Some people would say it's here. Either one would work. I just would choose this one, just because to me this looks like, yeah, a swing, okay, or U-turn. U-turn is the term I use a lot for looking for targets too. That looks like a swing, so I would go high to low. As soon as you start stepping back here, you just have too many, and I found these guys don't hold that much. It also would give you support way far away from price. If you were in a long, you wouldn't want to wait until it pulled back that much to use the symmetry as a stop, you know.
So you wouldn't want to take the high all the way to the left of the...
Yes, you would. Once it starts getting really, let's assume that this is an outstanding high, and before here it was in a, you know, it was in an uptrend to that point. This is a whole swing. Then yes, once that's exceeded, I would use that. I would have to evaluate what chart it's on. Do I really want that on my chart, or is that turning into too many lines that are far from price that don't help us at all with a trading decision? Technically, yes, you would use that. If this high, if before this we're actually going up like this, then no, then it's just in the middle. Okay? But yeah, I mean, like I said, better to have more than less when you're starting out. But when your chart gets cluttered enough that you end up, you know, up here with price is up here, and you have support all the way down here. For crying out loud, is that helping me with my trading decision right now? It's so far from price. I'm not going to use that.
Is that determined because you're short-term trader as against position trading, like you said, it's too far?
Well, you see, the difference is for position trading, what I would do then is I'd be using a higher time frame chart. So I'd be looking at closer things. Yeah, I mean, I could take this S&P chart and the S&P daily or Euro USD daily or whatever, and have it so you have all the support down. I mean, I'm talking about things that are in powerful uptrends. So the Euro, for example, I could give you support that takes us, you know, 500 pips away from current price. That's not going to help you today. You know, so it doesn't really matter whether you're position swing trading or whatever. If someone wanted that much more support on the chart, I'd say step up to a weekly. If you're investing in something that it's an investment and you're going to hold it for 10 years, you know, then step up to a higher time frame, because that way also the advantage of the higher time frame is you're only looking at larger swings. So that stuff is stronger. Okay? That's one of the reasons to do that. I think they heard what I said about the town. Save me.
So will you just clarify one thing for me again? Where you said the change initiated on the left side of the chart?
Yeah.
Directly above that, go to left.
Here?
Now go straight up.
Here?
To the top right there.
Yeah.
You said that's where the change occurred?
No, the change occurred, actually, I'm just not sure which one of these was the actual low here, but the change occurred when you started to build a pattern of higher highs and lows, when you started to exceed the prior swing highs.
Well, that's how I would perceive it.
Right.
But I thought you said where it spiked to the left of that's where there was a change.
No, I meant after. That's where it started. That's where the low was. When it spiked down there, it verified it hadn't changed yet. Okay. Because it broke any attempt at support. Okay? So that's what that means. Okay. Let me see where we are next. Any other questions at the moment? Oh, yeah, this is a good slide. Yeah, this is one of the slides where it didn't print something on your chart. I think you're missing that red line, at least in the copy I got.
Yeah.
Yeah, I don't know why that is, but this, by the way, is an almost current bond daily chart. And again, remember what I said, this stuff applies to everything. So if I'm talking bond, don't let your eyes glaze over just because you like to trade the yen, okay? The only reason I'm sticking this chart in here is because I want to let you guys know this is actually all going somewhere. Okay, we are actually building on concepts here to give you something tradable. This bond rally, this was a daily chart. This was a high that we were looking for a long time, for a few months, and we were able to, with this work, project where the reversal point would be. All right, in price and time. I mean, I think I missed the timing by one day after looking at this for, you know, several months. That's not because I'm a genius. That's because, no, that's not because I'm a genius. There are lots of other things that are because I'm a genius. Oh, I like that joke. I'm going to remember that one.
You were patient.
Yeah, well, it doesn't matter because the same pattern could show up on a 5-minute chart. You know, the thing is, it wasn't so much about patience. The thing was using these techniques to project likely turning points in the future, whether it's a 5-minute chart or a daily or a weekly. So the reason I stuck this chart in there is because I knew that by the time we went through all that symmetry stuff, you guys would be bored to tears. All right, because that was very, I mean some of you, because that was very technical, pinpointing how to use one particular tool. And I just want to remind you that we are working towards bringing this together as a cohesive whole to give you something to work with. All right. Yeah, actually the bond is right here now testing this support level. This, by the way, is a big, those of you who are familiar with it, this is a big Gartley resistance pattern.
Where did you project that from?
I'm sorry?
Where did you project it from? What's the basis for the projection?
Here, this resistance.
Yeah.
There's several, well, I can tell you, but it's getting ahead for people who are not familiar with this stuff. First of all, we have one of my favorite levels in here, 786. That was from major high to low. I'm sorry, that was from the intermediate high to low. 786, 50% major high to low. Target of this swing, expansion projection, this time in the direction of the trend because this is a Gartley pattern. We're going to cover Gartley's. This zigzag told me, and I told a lot of people, that this was probably going to fall at this point once it hit this resistance area because it matches, this zigzag matches very, very specific Fibonacci ratios. And we're going to go into that too. But combined with that, I also ran the timing factors between the swings. And the timing, like I said, came one day off. I think I was saying it was the week before last Friday, and the high was actually on a Thursday. So that wasn't bad, actually, considering that we had those timing projections on the chart since August, to be off by one day.
Do you find that this bond chart or any other specific stock, some of them match Fibonacci levels and some of them not so well?
Yeah, but that's cyclic. The question, actually I want to make sure that's on the recording. The question was, do I find that specific securities, trading instruments, match the fib better than others? And the answer that I have for that is yes, but it's cyclic, meaning that sometimes you'll have a run for a couple of months where the bond is fantastic, and the euro is fantastic, and the GBP JPY is fantastic, and the ES ain't doing it as well. Or the ES will do great for 2 weeks. Then you have a day where it's not hitting anything. And so what do? I step back from it. If my technique that I'm comfortable with is telling me that it's basically the security is telling me that it's not playing by my rules, I don't want to be in that security.
So even on a bond chart, it'd be in a certain part of its cycle.
Yes. Right now, the bond is being very good about following the fib. Whether or not you can trade it is another story. We have people, that we work together every day. We're trading short-term bonds, and it's a tricky thing to trade short-term. We have a couple of very successful people at it, using my levels and their, and triggers and so on. On a longer-term basis, how this really helped is we were looking at bond, and we were looking at a bond ETF. Somebody who follows bonds is TLT. And what I was saying is, a while ago, I was saying be long on bond, and when we hit this area, close your long. Okay, so that was pretty obvious. Shorter term, we're looking at short side, and what am I telling the people who I work with who trade bonds? Try to catch the waves down, because the daily chart is showing resistance. Try to stay away from the 3-minute setups that are showing long, because it's not in alignment with the higher time frame. So that's why it even was helpful to go up to the daily, even for the people who are trading 3-minute chart stuff. Why not take the trades where the patterns are aligned across time frames? Makes more sense. And by the way, just to qualify that a little bit, I didn't think this was the easiest long to take. On the long term, what I had said to the people I work with also is, there's a long, and we're probably going to hit this target area, but it's going to be rocky. It's because there was a lot of other resistance in the way. It's not on this chart because it broke. So it worked, but you can see it was not the easiest thing to ride through. This could be a 5-minute chart or a daily chart, doesn't matter. If you were trying to take a position trade or swing trade, and this would have been a lot to ride through on the way up. But now it's smoother. Look at that. We had a couple of days where it just, went down. So again, I'm showing you this chart. I'm going to refer back to this chart as it was constructed so that you can see how this interpretation was done. Okay? And I think we're getting into retracements now.
May I just ask a question?
Oh, sure.
Going back to that chart,
Yeah.
how do you determine whether the market has made a high? Because it's typically trending and it's not really settled.
Well, if it comes down and hits the symmetry support and starts to bounce,
You have to wait until it comes down.
well, no, it depends on your time frame that you're trading. If you were trading, I mean, let's say that you were trying to buy something or sell something and stay in it for a month. That's going to be different than if you're trading it for a couple of days.
The reason I asked,
Yeah.
my mother taught me using the phrase mother that you need 2 to the left and 2 to the right. Do you use that sort of thing?
It might mean something different to me than it does to you.
What it does is a cycle high and a cycle
So I
low.
want to know in your terms,
Oh.
what do you use quickly to know?
Oh, right. Okay. What I would do on this, that's a good question. And actually, I could pull up some charts to show you. What I would do is step down to a shorter time frame. A shorter time frame, the high is going to be confirmed when I have my next shorter time frame start to break symmetry support. You see, all the way up here, like in this run, the support was holding, and we were trading long on the shorter term trades. When the symmetry support started to break, it was on the lower time frame. It was verifying that a substantial high had been put in. That's what I'm looking at right now on the stock index markets. Is we made actually on Friday. We made significant price and time highs. So Monday is going to be very interesting because are we going to start to break support on the 45-minute charts? That's my next time frame down from daily. Or is it going to hold and keep making new highs? So that's what I do is I step down to the next lower time frame and see what's going on with that. It's a very good question.
Is the high that we made on the S&P from, if you look at a weekly chart, from the high to the low, is that a 618 extension up?
That we're actually at just hovering below a 1272 extension on a weekly. But on the daily currently, on the daily, we just made the 1272 right below it from the most recent daily high to low, the low being put in October 2nd. That swing, we hit the 1272 extension, but we also hit the 1272 time extension of the same swing. So that's called a price and time square, which is formidable resistance. So far, I'm not seeing much of a breakdown as far as Friday's chart. Well, actually, it was Thursday that was hit. Friday, I was expecting to see the beginning of a breakdown. We actually formed, while I was on the road driving here, that's yesterday, it started to form more resistance than has been on that chart since October 2nd. So we'll see.
Convinced.
Depends on my time frame. If I was trading off a 3-minute chart, I would have been short yesterday, all right? Or a 15-minute chart would have confirmed trade short. If I'm going to put a bunch of dollars into a longer term position, not quite yet. Okay? What I'd want to see is a bounce and the new resistance holding. Failure from there, take out the prior swing low. I'll show you, I have the charts. And that would confirm it, and then I'd be scaling into a longer term short side position. All right, so that's the deal with that. Are we ready to get into retracements? No yes, no no?
Sure.
Any questions here? Was that a difficult question maybe? Because it was, let's go. All right, I'm going to start off by, let's see what time it is here. Yep. I'm going to start off by showing you the levels I use. And again, this is, nice screenshot of Fibonacci Trader. Tools. Here is what the retracement tool looks like, the icon. Okay. Obviously, you don't have to match my settings exactly. Some of these are personal preference. Hide 0 and 100 lines. Some people like those. In other words, it shows you the levels, the low and the high that you chose. I don't use the low and the high that you chose for retracement. In other words, 100% of the swing. So to me, it just clutters the chart. My goal is to have as little as possible on the charts. Although some people will look at my 3-minute chart at the end of the day and go, "Whoa, that's just because I don't have time to clean it up and stuff. That stuff far away from the market." So my goal is to have the information as clutter-free as possible, close to price. So that's where these selections came from. Show values reminds us which level is which, and so on. Keep live is the function, just like with the expansion tool, that automatically recalculates if you get a new swing high or low. The retracements I use: 0.236, 0.382, 0.5, 0.618, 0.786, 1272, and 1618. Those are the extensions, target levels. And I have 2618 and 4236 set up in the program, but again, not selected. Okay, so this is how I have my stuff set. One thing in Fibonacci Trader also, by the way, that is really cool and different than most any other program, like if you try to do fib work in an E-signal chart, you get astigmatism. You have lines all over the place. One thing that's really good is you get to choose things like extend to end and show from the most right point. Okay, most right point. Then exactly. You okay?
I'm so sorry.
All right. Yeah. Be careful until the next break, and we'll get someone to sweep it up. Yeah. What this means, what these things mean, and this is also helpful for interpretation. Let me go back to our bond chart. Extend from rightmost point means basically, and extend to end means that it's going to give you these nice long lines for stuff that's been in place for a longer period of time, and the shorter lines for things that have been in effect for a shorter period of time. So just a glance at this chart, and you can tell that resistance has been in place and is stronger than support. Try to do that, like I said, in most other packages, and what you're going to get is the lines all the way across the chart. So it's not just cosmetic, you're missing something that you could catch at a glance. Okay? Yes?
Curiosity, how to drive 0.236?
What's the calculation on it? I forgot. I didn't even put that in the... Yeah, it's one of those deals. Maybe someone else knows or is crazy enough to want to find out. We'll Google it later. Yeah. No, I forgot. I should know. 0.236 to me means the market's too extended, basically. But yeah, so again, this is printed in your book, so you have these to play with and to load into your thing. Another thing in Fibonacci Trader is that if you want to use different settings and you might want to change around, let's say you want a set of retracements set just to do the targets, you can set up another set of retracements and save it under a different file name. And that way, in other words, instead of changing these every single time, you want to see something a little different in how the information is displayed, you just load presets that you've created in the past. I don't do that much because I stick with these guys. And whenever I draw them, they all come up on the chart, and all you have to do in FibTrader is hold down your control key and left click on the ones you want to erase. So ding, 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 and they're gone. So I don't play around with changing those. I guess if you were running like a zillion daily charts and you just wanted to see where the targets were, you might do that. So anyway, that's kind of cool stuff there. Let me see what I have next as far as examples. Oh yeah, okay, I have retracement rules. Retracement rules. In an uptrend, and again, I'm sorry if this is too slow for some people, but I know we all want to be on the same page. Uptrend. Start with the lowest low on the chart and drag the retracement tool to the highest high. Repeat with each outstanding low after the lowest low. In other words, you have higher lows, but always connect to the highest high. Reverse for downtrend. All I'm saying there, and I won't go into a whole big, demonstration thing, but this is kind of counter to what a lot of people do with this stuff. All I'm saying, you know what, let me get a Forex chart this time. I want to show you guys that chart later. How about, yeah, here's our current Aussie chart. By the way, here's a lot of support far away from the market, so you can have it if you want, but all I'm saying is, I'm just getting rid of everything here. You start real low. Bless you. Just rescaling a little bit here. All right, lowest low on the chart will be back here. Come here. I'm having a hard time with this tablecloth. I have to bring a mouse pad in here. And low to high. Okay? We all know that, right? All right, this one I probably wouldn't even bother with because the closest retracement is the 236. It's pretty far from price. But basically, you just go to the next low and go to the high, okay? The reason I'm pointing this out is because, so there you got a whole bunch of messy retracements and you'd erase some of them. But that's what you would do with this. Some people, and I've almost had fist fights about this one, say that you're supposed to choose some kind of arbitrary, to me arbitrary, prior high to do the retracements. In other words, I've had people, I actually had this guy at a workshop one time come up and slip me a piece of paper while I was talking, and he said, "Why aren't you doing it this way?" I'm like, "Huh? Ask the question." He would say, "Take this high, take this low, and go to this high," like that. And I'm like, "Okay, you know what? That was valid when this was the high. What in the world is it telling you now?" And he said, "Oh no, sometimes it works." And I'm like, "Define work. Works. What do you mean it works?"
What's your percentages?
Thank you. You show me exactly what what is it that you're looking for it to do, and how often does it do what you think it's supposed to do? I've never got an answer, but I've heard that from like 20 people. On a shorter time frame, they'll say on a daily chart, or 5-minute euro chart, they would say, take yesterday's low to yesterday's high, and even though you're making new highs today, you should use those levels in some way. And I'm like, why? If it's been a straight uptrend.
Well, that's a question I really want to raise, because my understanding is if the market makes a move,
Yeah.
it needs to complete that extension.
Yes.
So even though it's keep going up, it's going to be waving until it reaches that point that you're trying to get.
Right, but let me
You need to bear that original dimension that you measure, because it's going to go to that level that it wants to reach.
Yeah, but going to the level implies that you have something above price for it to go to. I'm talking about a support. In the case of here, let me open. I'll get a shorter term chart here.
Mark,
Yes.
there's some sort of logic in that argument. I don't use it, but I've just said there, what is the logic? It might be some logic because those are the kind of the same points that are used in calculating the pivot points.
Yeah. Okay. So the percent that I've been over that.
Calculating the pivot points, and one of the pivot points is 50% below or above or something like that. It will hit.
Okay.
There is no real logic.
Yeah, well, I can see it as percentage of pivot point. So you know what? So use Fibonacci-based pivot point calculations instead, because otherwise, basically, this is what I'm talking about. Though, this is a 3-minute euro chart. Okay, so if let's say that this was that we rolled over to the next day right here. Okay, I'm not going to use a swing on this chart from here to here. Okay, this information doesn't mean anything. It's expired once we started. The trend is continued. It's not like we really retraced or anything. That doesn't mean anything to me anymore. To me, now there might be logic in that, as you said, but to me it doesn't work. So I don't want someone saying to me, how do you interpret this chart when they drew the retracements that way? Because it means nothing to me. I actually had someone, when I kind of grilled them on that, why are you doing that? What does that mean to you? I had someone say, well, it's because I have to, if I didn't use those, I'd have to erase my retracements and start over. So no, it's because you're lazy. You're lazy or using the wrong software. That's why you're doing it that way. Now, here, this 3-minute chart on the euro, what I want to see is highest high to low. Then we have another one. This one's kind of decent. I would probably, these are pretty close in price. So let's see this last high is very close to this high. So let's go from where the move actually started. When you have a bunch of similar highs that way, choose the last one on the right, because that's where the move really started to downside. So we have this one. Okay? And like I said on that page, I like to see like 2 to 4 is good. 2 to 4 retracement series. And then there again, to get rid of these guys, I was just holding down control and clicking. And that's
2 to 4.
2 to 4 retracement series is ideal. In other words, by the time, if you have a lot of outstanding highs and you have like 10 retracements, it's too many. If you've gone high to low, 10 times. They really should stand out. The pivots that you're using for the retracement should really stand out. And that's the other thing is I've heard people say not just yesterday's high to low, but they're going to actually use the open, yesterday's open to the next day's close. And I'm like, where are you getting this? Retracements are based upon the swing. They're not based upon time of day. Yes?
So if you were looking at a weekly chart, you couldn't go from the high to 1400 all the way down to the low at 666 and project the retracement up.
That's an extension. And that's what we're going to get. The target is what you mean, right? Are you trying to get a target?
Yes.
Yeah, that's why I have 1272.
Or resistance.
Well, you wouldn't be going from high to low. You'd be going from low to high. Well, for resistance, yes, you would go on a weekly chart, certainly. Yeah. The higher time frame. Maybe I'm missing the question exactly, but you're saying.
I guess, I don't know, I'm confused as to when you use you can't use your retracement when price is going from a high to a low and retracing up and then going to fall. That wouldn't.
Well, you'd be using the retracement for resistance then, yes. Yeah, exactly. You'd be taking prior high to low, you'd be taking highs to lows during the downtrend. You wouldn't be going low to high, though.
Well, it was a high to a low and then it retraced up.
Right.
In between, you have all those swings.
Yeah, yes, you would do that, and that's what we're going to do. Is right now we have to cover the basics of the tools, and we're going to get into that stuff a lot as we start to actually construct the charts. That's why I was showing you that bond chart. Let me just go back to that bond chart for 1 second. The purpose of which, that's too far. The purpose of which was to tell you guys this is actually going somewhere. Good example, I think, of what you mean. This resistance zone was not simple Fibonacci. This is, again, not your mommy's Fibonacci. This involves numbers taken from two different directions and multiple pivots. This, again, this is high to low to get this resistance, high to low to get another level of resistance that's overlapping so tightly the numbers are a blur. It's also high to low here to give us a target extension, and it's also a price expansion from this. So it's four different things all coming together into the same. So I think that answers what you mean. Yes, you would be doing that.
Well, actually, I guess my question is two questions.
Okay.
If you're going from a high to a low,
Yeah.
then you would use a retracement,
Yes.
wanting to find where resistance.
Yes. Yeah, that's where, here, you see in these numbers,
Right.
where it says 50 and 78.6, that's exactly what we have here. It's 50% high to low,
Right.
and it's 78.6% high to low, overlapping. So that's exactly what this is a retracement of the prior high to low swing.
So if you took on the S&P that high at 1440, and you went all the way down, and then you went up to the most.
Oh yeah, that's on my weekly charts. That's on all my weekly charts.
What is that? That is what you said is a 127.
No, that is not that whole big swing. What that is,
Big swing would be what?
from the high to the major low.
Yeah.
I'm really not sure what you're asking. What it would be.
From where we.
Are you asking where did I get the 1272?
Yeah.
From the swing into the low. Okay, I can show you. It's easier when we have a chart in front of us. Yeah. But again, that's stuff that we're building towards. Okay. So, retracement roles. I just covered some of these. If two lows in an uptrend or two highs in a downtrend are close in price, use the one on the right. Okay? Because that's basically where the move actually started. So that's what you want to use. Optimum number of retracements to run, retracement series. In other words, how many times you're using that tool on the chart? 2 to 4. The strongest support and resistance zones are where retracements from different lows or highs cluster together, particularly if they are overlapping symmetry. What did I just show you on that bond chart?
Same thing.
Okay. Erase levels which stand alone, with a couple of exceptions. Right on this page, pick up your pen, and write on this page, with exceptions, which we're going to cover. This is an interactive, this is the work part of the workbook. Okay, and also, last thing, in an uptrend, also run a retracement series from the last high to the current low to see what's in the way of the trade. And I'm going to show you that too. In a downtrend, run the retracement series from the last low to the current high. That's the target concept, and that's the next thing we're going to get to. I think this is actually, yeah, this is the S&P cash actually, again, a few days ago. Here's an example. Again, S&P cash daily, just assuming that you are a longer-term trader. This chart could look identical on a 3-minute euro. When you put in, when the high has been put in, and we're pulling down towards our support, and we're looking for a long at the support. If you're real, if you're rabid, I call them rabid counter-trend traders. You're short here, and you're looking to get out of your short here. I think it's more relaxing. Wait, and you're going to go long. We also run a retracement series from this high to this low, because it shows you what's in the way on the way back up. See, this 786 was just breaking. And it also gives you the targets. This is what we're reaching for up here. And which reminds me, I did this several days ago. You can tell these are not hindsight charts because the dot's green over there. That was the actual market price. If I was scrolling back, that dot would be red. But what happened, watch this. We're talking about targets. 1272. Okay? That's what we do for the targets. Same tool, retracement tool. So in other words, I was looking for support. We had the support here. What was that support made out of? Prior high to low from new high, high to low from new high, and so on, and a couple of retracement levels from prior outstanding pivot lows to highs. See that actually was a close right on the level, so I wouldn't have considered it violated. There's another, here's the button. I can take that one out because we had another one right below it. So these I ran to the prior high because I'm reproducing the chart I showed you on the PowerPoint. See? And so all that support. But then what you're going to do, as it's coming down into price, and again, it's the same thing on a 3-minute euro, I promise you, you're going to go high to low there because this is going to be the stuff in the way on the way up. And I will show you how to interpret what clearing or holding each of these levels means. Most important one to me is the 786. Once the 786 is cleared, most of the time you're going to make it to that initial 1272 target. Okay?
So as you, you clear these levels, you erase them, was there irrelevant?
Yes. Yeah, there are no, that's another thing. Some people will tell me there's still, resistance becomes support and all that. Not with retracements because they're the wrong ratio. You'd have to turn it upside down.
So this chart is current.
Excuse me.
We're going to, we break through 272, we're going to 618.
Not necessarily, because we're going to look, well, we have to look at the weekly, too, which I can show you. Actually, that'll answer the other question back there about where that target came from. There's a target right up here from the weekly chart as well. So once you hit the 1272, you want to look at anything that might be in the way from higher time frames or whatever. A lot of stuff I want to teach you about that 786, though, that really I promise you have not heard in other places. So let's just make sure we have the basics covered here. All right, we're all clear on those settings and the rules and this idea. And so does everyone understand I'm using the same tool to get the targets, just in the other direction? Y'all got that, right? Okay. Another thing, by the way, that's good about Fibonacci Trader compared to other programs is, I told you about the auto updating thing. Well, I can draw that high to low before the low is actually made. It's kind of cute, and you'll see this live on Monday. I can draw the high to low and sit back on a 3-minute chart. I don't have to worry about redoing it. What's going to happen is by the time price actually starts to rally, the targets will land in the right place. In other words, if I was drawing it here, high to low, these targets would originally be showing up here, and as price moves down, by the time when we actually start to rally, the targets are going to jump up and lock in the right spot without having to redo it and redo it and redo it. I could not trade or look at or analyze so many short-term charts as I do without the program doing that auto updating. That's very, very handy. Okay, targets. I think I have a slide on targets. Yeah, 1272 and 1618 of the swing into the setup, I'm calling it, so we don't have to say into the low or into the high. Projected in the direction of the trend. So those targets went, in the direction of the trend. The market may give you more than that, but there's often a pause or retracement at those levels, so it's a good idea to watch out. Now, what do you do with this? These targets? Be ready for the market to stall. What does that mean? It means that depending on your trading plan, you might want to exit the trade. You might want to tighten your stop, if that's realistic. The reason I'm saying you might want to is because there are some people in here who are trading a 3-minute euro with a small account. And if you just hit the target and that's your only profitability at that point, and there's no real room to move your stop because it's a 3-minute chart and it's very close to price, then yeah, you're going to exit the trade. Instead, use that as your price target. If you have room, tighten your stop. What I like to do personally, whenever possible, and it's, when I say whenever possible, I'm saying if I'm up enough in the trade, what I like to do at a target level is take a partial position off, take partial profit, tighten the stop on the rest. If it pulls back and triggers, let's say, long again, you can always add that partial position back in. If you're fast enough, if you're dealing with a fast chart. You can always add the partial position back in. But if the market stops right at that 1272, well, and then it pulls back and the balance has been taken out, your stop gets hit on the balance, at least part of the trade, you made every single cent that you can on it because it held at the target. So that's, if you look at the cover, or the title page on the book, not the cover itself, but that's something Linda added. This slide, and I think I have this slide in to discuss later on. This was the mini Russell contract. Russell's another stock index future. And this particular day, assuming you're a day trader and you're not looking to hold an overnight position, this 1272 target was hit to the tick. Okay, so that is a really great spot to close your position. If it backs down from there and you get another long side trigger, put the position back on, or if you're trading sufficient size to do it, like I said, take off half the position here, tighten your stop on the balance, like right below, nearer Symmetry, close by Symmetry. And that way, even if you give something back on the second half of the trade, half of the trade, you made everything you could on it. So you really can't do better than that. By the way, this is an interesting multiple time frame representation here because we have 1272 target here to here, and you see what's right on top of it, 786. That's from a higher time frame. That's why you see the line going off the chart. That's 786 of a high up here down to that low, or no, down to a low down here. So when you ask, well, if we break through the 1272, are we going to make the 1618? There's a 786 from a higher time frame. That's a major level, and that's why you can't answer that question that easily. Because you have to look at what's happening on the higher time frame, what the influence is on the higher time frame, from the higher time frame.
Should probably remember the 6-1.
Yeah, why? Why?
Well, just because it's, that's just market, how the market moves.
Okay, but you know what you don't want to do? You don't, Leonard just said it'll probably come down to that 618, and I'm not disagreeing with you. Okay, but the point is, but you know what? If you have a bias that way, it's dangerous. You read the chart, what the chart is telling you now. I'll tell you it might hit that 618 if it broke other support aiming for it. I can tell you how to tell when it's going to hit that 618. That one actually broke through the next day, right? It didn't retrace.
It could be anything.
It can do anything, but what I'm very careful forming preconditions in general. Okay. So where are we here? Targets. Yeah, I could have just gone ahead one slide. I have the same one right here. Yeah. Here's an example. Again, the same example. You get to see more information here. Here is a whole bunch of stuff put together that will show you how these things can interlock. First of all, This was a nice big Gartley. We're going to get into Gartley patterns probably at this pace. We'll get to Gartleys tomorrow, I'm not sure. Gartley pattern, or today.